So we're going to look at the markets and basically Bitcoin, but I also want to look into whether or not Bitcoin is a Ponzi scheme or a pyramid scheme, because I tend to get questions like that. You have these economists who say that Bitcoin is a Ponzi scheme, so I want to look at that as well. But before we even start there, let's just look at what Bitcoin is doing. Bitcoin hit an all-time high of $34,000, right? And that's just astronomical, because just a little while ago we was at 15,000, 12,000, right? Then we was over here by 20,000, and everybody was like, oh my God, is this going to be it? Are we going to break above 20,000? And we were just stuck in this range. And then once we broke it, which is how usually things happen when you have a breakout, we just went up basically we did $14,000. That's crazy. $14,000, right? And so you would never see the Dow Jones, the NASDAQ, gold, right? You would never see any of those traditional stock markets do a $14,000 run up, right? And people still want to talk trash about Bitcoin. But when you do the math, the best returns are going to be found here in Bitcoin, right? So as you see, we hit that top. Now, my last few videos, I always go back just to keep track of everything, right? When we hit 20,000, I said, you know what? We're going to come down for a correction because the RSI is high. We may hit 15,000. We have to wait it out and see if it comes down. That way I can buy some more Bitcoin. But if it didn't come down to 15,000, then I said I would buy a little more. And so when it didn't come down to 15,000 and it went up, I bought a little more, right? So then we had this huge breakout here, and we was up to like 30,000. And then I was saying to myself, you know what? I'm going to wait to see, because I was saying to myself, we can still come back down to 20,000 for a correction. And the reason I keep saying that is because of the RSI levels being so high. And usually this has to come down. It doesn't always happen that way, but usually that's what ends up happening. And if I can just buy Bitcoin when the RSI level is really low, that'll maximize my profits. And so that's my main objective. But like I said, things don't always happen that way. You can actually stay range bound in the RSI levels for a very long time before we get that correction. Now, we had a big correction here, but of course we went to 34,000 like this. You have to have some type of correction. This actually is a 20% drop. In Bitcoin, we're accustomed to 30% drops, 40% drops, right? Bitcoin's history has had 80% drops. So what you have to keep in mind is when you have drops like this, don't panic, right? Do not panic sell. Why are you panic selling? Why are you panic selling, right? You do not want to panic, because what happens is, just like I'm a little guy waiting around to get the best price in Bitcoin, you have somebody with millions of dollars waiting to get the best price themselves, okay? And that's exactly what happened here. You had this 20% drop, and what probably happened was when this hit 34,000, people took profit. I mean, hey, take profit. If you put a lot of money into Bitcoin, or you reach a certain level where you can take some profit and just leave the rest of it, then go ahead and do it. There's nothing wrong with that, right? Now, if you just want to leave it there and go the extra mile, that's up to you. Everybody has their basic preference on what they want to do, right? But this is what probably happened. People took profit. It came down, and it probably, as soon as it did that 20% drop, you probably had people who had orders in this vicinity here. And so as it dropped down to 20,000, all those orders were just filled, and then it shot back up, because just people are just going crazy over Bitcoin right now, right? Because there's only 21 million. Everybody says it's going to go down. It's a bubble. It's going to go to zero. It's going to crash. And yet it keeps going up, right? And what I always say is, if Bitcoin did not crash during the coronavirus pandemic back in March, what makes you think it's going to crash now? right? Because we had the 2017 bull run, and then we dropped all the way down to 3,000. And I was buying the whole time it was going down to 3,000. That's how I was able to pay off my credit cards when it jumped from 3,000 to 6,000. But during that whole 2018 period, 2019 period, people were still buying it. A lot of people that got into in 2017 that I know, they completely, after Bitcoin crashed down like that, they just forgot about Bitcoin. They didn't want to get back into it. And that was actually the best time to get into it, right? And now we're back up. So we're at these levels here. Right now, I am waiting still. We had this 20% drop. Let's go to the hourly just to check out the hourly. And the reason I want to show you the hourly is because it's still an uptrend, right? We're still here, uptrend. So when I was waiting for it to come back down and it never came back down, like if you check out my last video, I was waiting. I was saying maybe 15,000. But if it doesn't and I see it's about to shoot up, I'll buy a little more. That's exactly what I did. When I seen that it wasn't going to come down, I bought a little more, right? You don't want to take all your money to put it into Bitcoin and not have anything for food or bills. You don't want to do it. I seen one guy ask whether or not he should sell his house and put all the money into it. Some people actually have done that, and they probably very happy now. But you got to be able to weather that storm, right? Not everybody could do that. So what I do is I take a little bit because I still have bills and everything to pay, and I wait. And when I see the market consolidating like this, you see this sideways movement right here, the market is consolidating. All I have to do is wait to see which way it's going to break out. And I was expecting the correction. It never came. It broke out. So as soon as it broke out, I bought a little more, right? So I added to my Bitcoin accumulation. It hit 34,000. You had this 20% drop. And if you notice, it's staying up on this yellow, above this yellow line here that I have as an indicator, which is the 200-day simple moving average. And it hit, bang, bounced back up. Now, I'm still going to wait. Now, we did hit 30 on the RSI here on the hourly, so we can actually go up. But I'm still going to wait, because now what I'm expecting is, in the same fashion that we had some consolidation here, we might see this also, but going in an upward momentum. We might even come back down again, 29,000. So all I'm going to do is just wait and see what's going to happen, because it might come down. Remember, the RSI on the daily is still high. So all I'm doing is watching the charts, and I'll repeat the same pattern, which is I haven't bought any more. I'm going to wait to see if it doesn't come down, right? If it doesn't come down and I see it breaking up to the upside, then I'll add to my position. And the reason being, there's only 21 million and everybody's buying it up. And all the institutional investors is coming out. They got big money. They're going to buy it all up, right? And then we're not going to have enough for us because they're going to be buying it up. Or when you do decide to finally get into the market, you're going to pay a very high price for a little amount of sats, right? So that's the reason why it's good to buy at a low price. So for right now, let's put it on the back on the daily. I'm just going to wait it out to see how much we're going to come down. But, someone said, Willie Woo, I believe it said, we already hit a 20% correction. We might not see 30 or 40 correction anymore on Bitcoin, being the fact that a lot of people are buying it. And this is the bull run that we've been waiting for. Remember, we was on basically a 3-year bear market. So it's time for the bulls. And they already showed themselves off because we passed all-time highs, right? So that's the Bitcoin is a difference, right? And this is from Investopia. And it says, pyramid schemes and Ponzi schemes have many similar characteristics based around the same concept. Unsuspecting individuals get fooled by unscrupulous investors who promise them extraordinary returns in exchange for their money. However, in contrast to a regular investment, these types of schemes can offer consistent profits only as long as the number of investors continues to increase. Basically, investors continue to contribute money to the portfolio manager. So somebody's running this company, and then as you get new investors, it says who promise them a high return, And then when those investors want their money back, they are paid out with the incoming funds contributed by the later investors. So as the new investors are coming in, the older investors are getting paid from the new investors that's coming in, but the manager at the top is running it. Okay, and so there's a centralized figure running it, like Bernie Madoff, right? It has to be a centralized figure running that. So it says the person organizing this type of fraud is in charge of controlling the entire operation. They merely transfer funds from one client to another and forego any real investment activity. So they ain't really putting their that money to do anything. All they're doing is they take money out for themselves, and when a new person joins, they take that money and they pay the person that was there before him. Now, the most famous Ponzi scheme in recent history and the single largest fraud of investors in the United States was orchestrated far more than a decade by Bernie Madoff, who defrauded investors in Bernie L. Madoff Investment Securities LLC. Madoff built a large network of investors that he raised cash from, pooling his almost 5,000 clients' money into an account he withdrew from, right? In Bitcoin, nobody's withdrawing. Like, there's no, like, let's say Satoshi Nakamoto is not withdrawing funds out of there to pay the next Bitcoiner that's coming along, right? He never actually invested the money. And once the financial crisis of 2008 took hold, he could no longer sustain the fraud. The SEC values the total loss to investors to be around $65 billion. The controversy sparked a period in late 2008 that is known as Ponzi mania, in which regulators and investment professionals were on the hunt for other Ponzi schemes. So it's like they knew, other investors knew, they said, yeah, I just want to make some money, right? Pyramid schemes. A pyramid scheme, on the other hand, is structured so that the initial schemer must recruit other investors who will continue to recruit other investors, and those investors will then continue to recruit additional investors, and so on and so on. And so both of them sound familiar, but they're actually different, right? It's just like very thin thread lines that separates them. Sometimes there will be an incentive that is presented as an investment opportunity, such as the right to sell a particular product. Each investor pays the person who recruited them for the chance to sell this item. The recipient must share the proceeds with those at the higher levels of the pyramid structure. Now, it says here, one key difference is that the pyramid schemes are harder to prove than the Ponzi schemes. They are also better protected because the legal terms behind corporations are much more powerful than those protecting an individual. Hey, that's not surprising, right? One of the largest accused pyramid schemes was with the nutritional company Herbalife. Even though they were labeled as an illegal pyramid scheme and paid out more than $200 million in damages, their products still sell and the stock price looks healthy. Now, I read the case from Herbalife when it came out. So you have the Ponzi scheme, you have the pyramid scheme, and then you have multi-level marketing, right? And multi-level marketing is legal, but it looks almost like a pyramid scheme. So a lot of people who are into multi-level marketing get accused of running a pyramid scheme when they're really not. So Herbalife has a multi-level marketing system. And so they got sued. Now, I remember reading the case. The judge decided that they was not a pyramid scheme. And the reason being was because Herbalife actually sells a product. And the key in the decision, if you go back and read it, is that if that company only makes money from recruiting people, and that's it, that's how they solely make their money. I have to get Joe in here. He's going to pay me $100. And then once Joe is in here, I'm going to go get Jane. And then when Jane, she's going to give me $100. And then with that $100, I'm going to pay Joe anything, right? And I have to, and if I get all my revenue, all my profits, all my money through just only and solely recruiting people, that makes it a pyramid scheme. But in the Herbalife case, they were selling product. The problem was that they was recruiting more people than they was actually selling products. So what the judge said, I'm not going to rule that you are a pyramid scheme, although it's really close, But you got to go back to your company and reorganize so that you can start selling more product than you are recruiting people. And that's why today their stock still exists. And that's the reason why they was not considered a pyramid scheme. So you have to, it's very thin lines between Ponzi, pyramid scheme, and multi-level marketing, right? And so it's the same thing with Bitcoin. It's like very thin lines that people try to use, but they really don't understand what's going on. And so you have to do your own research. I decided to do my own research, and I came up at the end with the conclusion, not just because I'm biased and I like Bitcoin, but it just doesn't make any sense that Bitcoin would be a pyramid scheme, right? So it says, in the same way that investors should be investigating companies whose stock they purchase, it is equally as important to investigate those who manage their money. It is helpful to call the Securities and Exchange Commission to ask if there are open investigations into a money manager or prior instances of fraud. In the case of Bitcoin, you don't have to do any of that. You just go online with the blockchain. You can see all the addresses that people hold. You can't see the exact person who he is, that he's Maria or John, but you know the addresses, you know how much money is in that wallet. Everything on the blockchain is public. That's why it's called the public blockchain, okay? So you can see all that. Nobody's hiding anything. You don't have to go knocking on somebody's door. You don't have to go to the SEC and ask them, what's going on with Bitcoin? You go online yourself and you can verify everything with the blockchain, right? So that's Investopia. Let's go over here. I found this one article and I think it makes very good sense. Because you'll go online, if you type in, is Bitcoin a pyramid scheme? You're going to get a bunch of articles that say yes. And then if you say, is Bitcoin not a pyramid scheme? You'll get a bunch of articles that say no. And everybody has their position. You do the research and then at the end you come to your conclusion. Bitcoin is not a pyramid scheme, as there is no reward and guaranteeing returns for buying BTC coins. So usually in a pyramid scheme, Ponzi scheme, they're going to say, hey, listen, if you join, we're going to promise you this amount of returns on your money, and you basically ain't going to lose no money. Like that's a false promise that I'm advertising to you or giving you, and it's really not real, right? So you always have to, like, nobody's saying, like, people are saying, yeah, if you put your money in Bitcoin, yeah, it's going to go to $100,000, it's going to go to it. But that's, you're taking a risk. You're taking a big risk with Bitcoin. It's not like it's a small risk. No, you're taking a risk with Bitcoin, and none of that is guaranteed. Okay. Now it says to be wary of the people who claim otherwise. However, there have been many platforms that use Bitcoin in their scams. For example, BitConnect, right? But that tells nothing about the coin and the technology behind it, because, you know, people use cash for all types of illegal drugs. They're always accusing Bitcoin of being used for illegal purposes, but the number one currency that everybody around the world uses for illegal transactions has always been cash and still is cash, right? Criminals are always amongst the first adopters of new technologies, be it cars, shoes, cell phones, guns, or any other useful instrument. Bitcoin is just another technology that they can use in their schemes. After all, the US dollar is not a pyramid scheme too, although it is often used most of the time in doing illegal actions, right? What about a Ponzi? In short, Bitcoin is the total opposite of a Ponzi scheme. A Ponzi scheme is very similar to a pyramid scheme, except you are not rewarded for enrolling other people, but you do earn a part of whatever they pay. So I was in a multi-level marketing company where we were selling life insurance, right? And I had to pay $100 just to join the life insurance, right? And then I would have to study in order to take the license to be able to get my license. Now, the reason that wasn't a pyramid scheme, although it felt like it was kind of like a pyramid scheme, is because once I get my license, I can just sell life insurance and not have to recruit anybody and still make money. And remember, to the courts, you have to be able to sell the product and recruit people, and then you're fine. But if you're just recruiting people only, then it becomes a pyramid scheme, right? So this is just a picture of it. There's always somebody at the top, okay? In a pyramid Ponzi scheme, there's always that one centralized point In Bitcoin, we're decentralized. There is no one centralized point because Bitcoin is decentralized. And this is what I like about what this guy says here. He says, a Ponzi scheme needs a hierarchy, or people who are down to generate returns for people who are up. Bitcoin operates on a decentralized model that has absolutely no hierarchy and where everyone is equal. The Bitcoin protocol is completely open source, so everyone can take part in its development or contribute to its infrastructure via BTC mining. So in law, usually in law, in order to prove a case, there's elements to a charge. So if you get charged, for example, with intentional murder, right? Intent is an element, right? And then you're going to have more elements. Gun possession. Let's say you get in charge with intent to harm somebody with a firearm. You have intent, possession. You know, you have different elements and charges that have to be proven in order for it to be considered. In a courtroom, once you can prove one of those elements of a charge, automatically the charge gets dismissed. Okay? So automatically, anybody that claims that Bitcoin is a Ponzi scheme or a pyramid scheme, because we have no central authority, you're missing an element to your accusation, to your charge. And therefore, since you can't prove the very first element of your accusation, of your charge, it automatically gets dropped. We don't even have to consider the rest because there's no hierarchy. You understand what I'm saying? And so that automatically, this is why I like this article, because it's so short. Like I was expecting to read like 4 pages or something trying to explain this away. And it's very simple. There is no centralized figure. That's it. That's it, right? But some people want to change things, right? And judges tend to do this. If you ever go United States Supreme Court justices or federal courts, right? This month, it's legal. 2 years down the road, they switch it. Now it's illegal, right? Abortions was illegal. Then all of a sudden now abortions are legal. Now they're trying to get it so that they can make abortions illegal, right? So with judges, it just seems to be that they interpret the law however they see fit, just to make it fit. And so some people are the same way, regular people, a lot of these economists, right, who just despise Bitcoin because it's doing so well. I heard one guy said, oh, Bitcoin is a Ponzi scheme without the hierarchy. Well, you just made something totally up for your definition of what a Ponzi scheme is. That's not the definition of a Ponzi scheme. So you have to be careful when people start just making up their own interpretation or new ways of explaining a Ponzi scheme when that's not what a Ponzi scheme is, right? So you got that there. If you go here, this is an actual case of Bernie Madoff. And you're going to see here, it says, it says here, as is true of all Ponzi schemes, Madoff used the investments of new and existing customers to fund withdrawals of principal and supposed profit made by other customers. Madoff did not actually execute trades with investor funds, so these funds were never exposed to the uncertainties or fluctuations of the securities market. Fictional customer statements were generated based on after-the-fact stock trades. So he was just making up fraudulent stuff, okay? That's totally different from Bitcoin. You ain't making nothing up in the Bitcoin blockchain. It says Madoff's scheme collapsed when the flow of new investment could no longer support the payments required on earlier invested funds, because he was basically insolvent. There was basically no money there. And in a Ponzi scheme, that's one of the elements. In a Ponzi scheme, that's how it starts. There's no money to pay anybody, so they have to wait till people join in order to be able to pay. As the more and more people keep joining, and they lie to people and tell them, yeah, this company's doing good, but in reality, they have no funds. So in Urbanar versus Marcoux, which is a Second Circuit federal court, describing typical Ponzi scheme where early investors are paid from the investments of more recent investments until the scheme ceases to attract new investors and the pyramid collapses. Right? So we're not going to read that whole thing. But is there another part here that I think I've seen? Yeah, so let's go to this next case here. So here, for example, a Ponzi scheme is a fraud. There's another case. This one is Jan V versus Acquire, right? Court of Appeals, Fifth Circuit. A Ponzi scheme is a fraudulent investment scheme in which money contributed by a later investor generates artificially high dividends or returns for the original investors, whose example attracts even larger investment. In another case here by the Fifth Circuit of 2009, a classic Ponzi scheme. As new investments come in, some of the new money is used to pay earlier investors. Now, if you just want to look at that plain like that, you could say that about any stock, right? You need that new money coming into those stocks because otherwise the price is not going up, because many of those stocks on the stock market don't make money off of the stuff that they produce. Their prices are going up because of the flood of money that's being poured into the stock by traders and people who are just looking for places to park their money in it. But in actuality, look at Elon Musk's stock or his company. He was operating at a loss for years. I think it was just last year that he finally made a profit. But people were still pouring in their money in there. You understand what I'm saying? And that's why the price always looked like it was doing good. So the Second Circuit also provides a Ponzi scheme is a scheme whereby a corporation operates or continues to operate at a loss, right? Bitcoin is not operating at a loss. There's 21 million Bitcoin. We already know that. And so there's going to be Bitcoin available until 20 million is up, and you can verify all that. Then you got the corporation gives the appearance of being profitable by obtaining new investors and using those investments to pay for the high premiums promised to earlier investors. The effect of such a scheme is to put the corporation farther and farther into debt by incurring more and more liability, and to give the corporation the false appearance of profitability in order to maintain new investors. This circuit has found that a Ponzi scheme, as a matter of law, remember I was telling you about the certain parts that you have to meet in order for it to go through, as a matter of law, insolvent from its inception, right? So in order for you to even to start to consider that something is a Ponzi scheme, that company, whatever that entity, whatever it is that you are accusing of, has to already be insolvent. Because now he's going to lie to people because he needs them to come in and put their money in there. Otherwise, because if you tell the people the truth that there's nothing in the basket, they're not going to put their money in there. But in a Ponzi scheme, they lie and they commit fraud by not letting you know that they're insolvent. There's no money in there. There's nothing there. But yet I'm going to lie to you so that you could continue to put your money in it. And then the people who had joined there the previous year, I'm not going to let them know that, you know, I don't have no money in there, that I'm just bankrupt. I'm not going to let them know. Instead, what I'm going to do is, as the new people come in, I'm going to pay them. That's a Ponzi scheme. You can't compare that to Bitcoin, okay? Bitcoin is there. The block ledger, the blockchain is going to let you know how much Bitcoin has been bought out, right? And just as long as people continue to buy Bitcoin, even when the 21 million Bitcoins are mine, that I still own Bitcoin. So that just means that no more Bitcoins will be mined. But if you want to get Bitcoin and you come to me, I got Bitcoin. I can do trades with you with my personal Bitcoin, right? So is there more here? I think I had seen like one more little paragraph here on Ponzi. No. All right. So again, you know, there is no hierarchy in Bitcoin. It's decentralized. It's a payment method. It's digital cash. It's a store of value. This is the incredible thing about Bitcoin. It could be used in so many different aspects, right? The reason certain people don't want to call it money is because they say the only one who can issue money is the government, right? And the only reason they can do that is because they're the ones who have the guns and they're the ones who can send you to prison. And so they'll tell you, here, take this orange and this is what you're going to pay taxes in. And if you don't, and this is the only thing we're going to accept as taxes. So now you're going to drop your dollars and you're going to start growing orange trees because it's the only thing they accept, right? And so they're always going to say, yeah, Bitcoin's not money, but the person who invented it calls it digital cash. If you go to their white paper, They consider it a payment, peer-to-peer payment system that they created so that I can be able to, let's say you have that orange and I want to buy this orange from you, and on my smartphone I got Bitcoin and you have a Bitcoin account, and I can send you $2 in Bitcoin for this orange, and then that's a peer-to-peer payment system. I just transferred my money in Bitcoin to you. It's like digital cash. Same thing, I would give you $2 for this orange. It's the same thing with Bitcoin. I'm giving you $2 worth of Satoshis for the orange. It's the same thing. It's a payment system. They would rather call it acid because of the complications that comes into it when you start going up against the government's currency, right? Because the government doesn't want to allow that, because they want to remain control of the population, and so they need to be the only ones to issue the money. So that's why they don't want to call it actually money, right? But it works just like money. You can use it as a store of value. You can use it to do different things with it, right? I can convert my Bitcoin. People say, oh, you can't buy anything with Bitcoin. Well, yes, you can, because with my Bitcoin, I could go on PayPal right now, and if there's a PC gaming system that I want, I can use my Bitcoin to buy that PC gaming system. Once PayPal gets the Bitcoin, they do whatever they want with it. They can keep the Bitcoin, or they can just right away trade it for fiat currencies. This is up to them, right? So anyway, that's... Oh yeah, here goes one more. I got one more for you. Hold up. This one was actually a good description here. It's a bit long, but it's good if you want to check it out. Unchained Capital. And look what it says here. Definition of pyramid scheme, Securities and Exchange Commission. In the classic pyramid scheme, participants attempt to make money solely by recruiting new participants into the program, which is what we talked about. Federal Trade Commissions give you a few here. See, here it explains about multi-level marketing. Not all multi-level marketing programs are pyramid schemes. That's a fact. Just like the Herbalife, right? People were accusing it of being a pyramid scheme, but the judge said no. They sell a product, Herbalife products, and they recruit people. So it's not a pyramid scheme. But all pyramid schemes are in some fashion a multi-level marketing program. With pyramid schemes, there is always some company and it is selling a product for which the end demand falls short of the available supply. The company recruits participants to purchase inventory and to recruit new participants. The participants are all salespeople, and compensation is tied mostly to recruiting, right? Then it gives you a picture of how a pyramid scheme, if you see, that's why they call it a pyramid scheme, because there's somebody there at the top that's controlling that. And as these people come in and pay this guy at the top, and of course people say, yeah, but Bitcoin's price is going to go up if more people have to buy into it. You don't say that about stocks, right? And it's not centralized, okay? If we're looking at the definition, there has to be somebody up there controlling it, right? We're not talking about your own made up definition of what a pyramid scheme or a Ponzi scheme is. It says, the distinction should be glaringly obvious, but because Bitcoin is complex and the very idea of money is not well understood, it can easily be confused. Bitcoin will only become a global reserve currency if hundreds of millions, if not billions more adopt it. And it's seemingly everyone that goes down the Bitcoin rabbit hole ends up on the other side explaining it to their family and friends, pitching it as better form of money. Sounds like a pyramid scheme, right? Wrong. When Dell started selling PCs on its website in 1996 and everyone told their friends to get a Dell, was it a pyramid scheme? No. When Apple released the first iPhone in 2007 and everyone told their friends to drop the BlackBerry for its superior success, was it a pyramid scheme? No. So some people like to say, oh yeah, I got a referral link. If you sign up, I'll get $10 in BTC. Oh yeah, that's a Ponzi, that's a pyramid scheme. No, because every time you get on your phone and you go on Facebook, there's always some ad, somebody trying to sell you something. Every time you turn on your TV and you're watching regular TV, you're watching YouTube, there's always some ad of somebody trying to sell you something, right? So just because somebody's trying to sell you something or telling you to buy something doesn't automatically make it a Ponzi or a pyramid scheme. Technological shifts often happen fast. 10 and 20 years later, smartphones and PCs are ambiguous. It's all about the quality of the product and the incentive structure. If someone owned Apple stock or Dell stock, did it change the fact that the product itself provided a real value proposition? Was there a direct benefit for telling people about a new technological innovation? The value proposition of innovation trumps all else. Does it not matter how you learn about it? All that matters is whether the innovation provides utility. And if it does, people will want to use it. If it doesn't, they won't. That is what makes it a market. And people always say, yeah, what's the utility in Bitcoin? Well, first of all, if you ever try sending a payment, let's say I got a family member that lives in Venezuela. Venezuela is under U.S. sanctions, right? Poor people over there going through heartaches and pain because of these U.S. sanctions, right? They can't access let's say the SWIFT banking system, but my grandmother needs money, right? If I wanted to send her $1,000, the bank, MoneyGram, what's the other one? Western Union, right? They're going to charge me a big chunk of money to send that $1,000 over there. But if I send $1,000 in Bitcoin to my grandmother, the fee is much cheaper. So why would I go to Instagram, the bank, the Western Union to send somebody money, right, and pay a big fee when I can go to Bitcoin's, use Bitcoin's blockchain technology and they'll charge me less? Right? There's been cases in the news where people have moved $1.5 million and were charged very little, whereas they would have used that in the regular banking system. They would have been, big chunk of that would have been cut out for them, right? So Bitcoin has utility. You know, people say it doesn't, but it does. So it says Bitcoin's utility is as money. It has a market because it solves a problem inherent in modern money. Not only is Bitcoin not a pyramid scheme, there's no hierarchy, it's decentralized. It is fundamentally distinct from the class of innovation that could be offered by any individual company. Bitcoin is not Dell and it is not Apple. It is not a tech stock. There is no company that exists behind Bitcoin. Bitcoin is not a company selling a product, and there is no income stream to pay future dividends. Bitcoin is not about making money. Instead, Bitcoin is money, or at least it has become money to those choosing to store a portion of their wealth in it. Just like people take US dollars and they save their US dollars and it becomes a store of value for them. It's the same thing with Bitcoin. The difference between the US dollar and Bitcoin is that your US dollar, if you save $1 million today and leave it there, according to the dollar's purchasing power, it continues to go down throughout history. So those $1 million, $10 million are not going to be worth the same in 30 years. Whereas they say Bitcoin is deflationary and it'll remain, not only will its price remain, it'll actually be worth even more in the future. So you have to make the choice. Do you want to keep your money in US dollars or do you want to keep your money in Bitcoin, right? Bitcoin's innovation, oh, my bad, I didn't finish this. And it is not a get-rich-quick scheme. It is fundamentally about storing the value you already have created. Bitcoin is a bearer asset. However, unlike a bearer bond, there is no income stream, right? Bitcoin's innovation is that it represents a superior form of money, but there are no future promises beyond being in possession of a digital bearer instrument. The only utility of Bitcoin is holding it as a currency and transacting with it in the future, whether that be in exchange for legacy currencies or other goods and services. Bitcoin is only useful as a form of money, and it will only maintain value if others demand it in the future, right? But this is true of any form of money, not just Bitcoin. Money is not a collective hallucination or merely a belief system. Monetary goods have distinct properties which make them more or less effective in facilitating exchange. However, monetary properties are not the absolute. The relative strength of monetary properties is the fundamental basis of demand. When the market evaluates Bitcoin, it does so relative to other monetary mediums like the dollar, the euro, and the yen. So again, the supply of Bitcoin and its rigid supply constraint, the foundation of Bitcoin's utility and fundamental demand, it is always why Bitcoin is not a pyramid scheme. There will only ever be 21 million Bitcoin. That is Bitcoin's Schelling point. Okay? And then here, you'll see the dollar's historical supply chart. And you can read this whole article. It's actually a very good, breaks down everything to you here. Here, if you look at where it says pyramid, in a pyramid scheme, the people selling the scheme are the scammers. These scammers are selling the promise of future monetary gains through high pressure sales tactics and by recruiting new members to the scheme as the primary compensation mechanism. In Bitcoin, the people buying Bitcoin are the scammers, as described in Michael Goldstein's timeless piece, Everyone's a Scammer. If this is you, you are the scammer. In most cases today, whenever someone buys Bitcoin, they are directly trading a fractionally reserved form of currency with the promise of future debasement. He's talking about the US dollar, in return for a bearer asset with a finite supply and a vastly superior monetary policy. The person on the other end of the line is getting the raw deal. Okay, so basically, the fiat money loses its value over time because it's being debased, whereas with Bitcoin, it's actually increasing its value over time. So you don't need to be a rocket scientist. You want something that's being debased, or you want something that's increasing in wealth over time, right? You pick. It's your decision. So, like I said, you can finish reading this whole thing, but like I said, after reading all this, it's no question that Bitcoin is not a Ponzi scheme. It's not a pyramid scheme, right? Satoshi is not up there. As a matter of fact, the Bitcoins owned by the creator haven't been moved, right? So he's not taking out his money to pay somebody else or anything like that. His coins are still there. You go up in the blockchain, you can see his coins haven't been moved since he had them in there. And, just because somebody's going around, a family member, a friend, telling you to buy Bitcoin, that does not make it a pyramid scheme, right? If I was selling radios and I was going around telling people, hey, buy my radio, right? Does that mean I'm a pyramid scheme or a Ponzi scheme? It's just usually people in the traditional markets, the old school people, they say you can't show an old dog new tricks, right? Instead of when everybody was waiting for the crisis to come and for everybody to run to gold, and then all the people that were owning gold, they say, yes, when the crisis comes, everybody's going to run to gold. And so I'm going to buy as much as gold as possible. That's where when all those people come running to gold, the price is going to go up and that'll make my wealth much bigger. But instead, people found a better way to store their wealth. And so they ran to Bitcoin. So now the old school people are upset because Bitcoin is taking all their fame. Understand?